The U.S. tariffs that Donald Trump is putting up are slowing down the rate of credit generation because they are preventing us from creating dollars and sending them out at an exponential rate. And so because the credit generation is being slowed down, the Ponzi scheme is breaking. We are going into a deflationary panic right now.
You're watching Silver News Daily. Subscribe for more.
The dollar is entering a death spiral, and almost no one sees it. Tariffs are making headlines, politicians are pointing fingers, and economists are arguing over trade deficits. But behind all the noise, a much bigger crisis is unfolding. We're watching the very foundation of our monetary system crumble in real time. And while everyone's focused on the symptoms, they're blind to the cause. This isn't just a trade war. It's a systemic failure, one that's suffocating the dollar's ability to expand, draining the lifeblood from the global financial system. And when that system chokes, silver doesn't just rise, it detonates. In past crises, silver has always played catch up to gold, but when it does, it erupts with violent speed. Right now, gold is stirring. Silver? It's the sleeping giant. The moment the illusion of strength in the dollar breaks, silver is going to move so fast, so far, that most will miss it entirely. This isn't a guess. This isn't a hunch. It's the natural consequence of a currency built on debt and deception, finally running out of room. So what's really happening beneath the surface of these tariffs? And why is silver about to become the escape hatch for the collapse no one wants to admit is already happening? Stay with me, because what comes next could redefine everything you think you know about money.
When are prices supposed to be rebalanced? This all sounds wonderful. We want to be competitive. We want to compete on the international stage, but the money's leaving. It's going to, we're buying tons of imports. Prices are supposed to adjust so we can be competitive too, so we can produce things too. And the traditional economists and even a lot of Austrians kind of pat the working man on the head and they say, well, you're just not being competitive enough. You're just not trying hard enough, right? The problem is you're not equipped for the international global system. You need to go learn to code or go work in high finance. Manufacturing has just left America. We're a service-based economy now. That is not true. What is happening on the fiat, we are not on a gold standard. We're not on an honest money standard. We are on a fiat dollar Ponzi scheme. And so the debt and dollars must, I say this just about every time I come on your show. The dollars and the debt must grow at exponential rates. They both must go bloop. And so to prevent the system from collapsing, what they have been doing so far is shipping those dollars offshore. Those dollars must leave our shores when we buy imports, and they must never come back. Because if those dollars come back, a couple of things will happen. Let's start with the other countries first. When dollars leave our shores, they end up on the asset side of other countries' balance sheets because of the skeleton of the Bretton Woods system. So the Bretton Woods system works. We have a pile of gold in Fort Knox, and we print dollars off of that. And other countries use our dollars to back their balance sheets. So if you go to any other country on earth, they have dollars on the asset side of their balance sheet. When we buy imports and those dollars end up in a country like Thailand or Vietnam or Japan or China, they end up on the central bank's asset side of the balance sheet. And they use those dollars on their balance sheet to print even more currency of their own because it's backing their currency. So as fast as we are printing money, every other country on earth must print their local currency even faster because they have to stay weak against our currency to keep the dollars flowing out and to prevent their exports from coming to us. So if that stops and they put up tariffs, every other country on earth, and this is being complained about loudly right now, every other country on earth is putting up enormous tariffs on American goods and services to prevent the dollars from leaving their shores. The central banks must keep the dollars or their currency blows up and they hyperinflate.
Everyone's talking about tariffs like they're some masterstroke of economic genius or the final nail in the coffin, depending on who you ask. One side says they'll bring jobs back, strengthen domestic industries, and reignite American prosperity. The other claims they'll tank the economy, alienate allies, and drive us straight into recession. But here's the truth. No one is saying none of it matters. because both sides are missing the core issue entirely. This isn't a battle over trade. It's a distraction from the terminal rot in the dollar itself. You see, tariffs don't touch the real disease. They only poke at the symptoms. Whether you restrict imports or encourage exports, none of that makes the money more real. The dollar hasn't been grounded in anything honest since 1913, and especially not since Nixon closed the gold window in 1971. It's not backed by productivity. It's not tied to gold. It's debt, multiplied by debt, dressed up as wealth. And tariffs? They're being sold as a fix, but all they really do is force the system to show its cracks. The talking heads on TV won't tell you this, but the entire model of free trade they worship presupposes sound money, and that's the fatal flaw. When you base global commerce on counterfeit currency, printed endlessly with no discipline, tariffs become nothing more than panic reactions. They're attempts to plug holes in a ship that's already halfway underwater. And every time the state intervenes to save local producers, all it does is distort reality even further. Real wealth comes from value creation, not trade barriers propping up inefficiency. This isn't about being pro or anti-tariff. It's about waking up to the fact that none of this works when the money is broken. And right now, those cracks are widening. The dollar's fake nature is being exposed by every policy move, every trade restriction, and every lie they tell to keep the illusion going. And as that illusion begins to fade, silver, real, tangible, unprintable silver, stands ready to step into the vacuum.
Seller and the consumer are bearing a portion of it. We don't really know how much. It's beyond the scope of this interview to go into how much. It really has to do with elasticity of supply and demand curves, which is, like I said, beyond the scope of this discussion. But they are both affected by it, and how much is, up in the air. So the local producer is being encouraged to be slothful and uninnovative and uncompetitive. And so let's put this to a thought exercise. So the foreign seller now says, you know what? I'm gonna double down on this. I'm gonna be so competitive. I'm gonna make the best car the world has ever seen. So we're gonna get past this tariff just through sheer competitiveness and innovation. So they cut costs and they make a even more quality car, and the car is even better than you could possibly imagine. And it's blowing the local car out of the water now, right? So even with the tariffs, the foreign seller comes back and they put this car in the market, and it's more, because of the tariffs, it's more expensive than it would be. But with all the innovations and all the competition, it's actually still cheaper and now much better than the local car. What does the local producer do? Does he say, geez, we should compete, we should innovate, we should get better? No, he says, let's run back to the government and get higher tariffs to get this ridiculous foreigner out of here so that they will buy our substandard product. Now, all of the viewers are probably saying, well, that doesn't sound right. I mean, the first tariff, maybe I can make an exception for, but the second one is preventing me from getting a far superior product than I would have been able to get otherwise. And this guy is just being lazy and slothful. He's not being competitive. Both of those tariffs that I just talked about are the same thing. One, I'm just making I'm making a much more clear example than the first example, right? And the idea that if the money stays here, if we just buy local, that we are somehow better off is not true. Without that competition, the local producer is encouraged, like I said, to be slothful, to be unproductive, to sell substandard products. With the competition, he'll be forced to do better. Now let's suppose this is in this international world that there is no tariffs and this other foreign competitor is winning all the time, right? And so this all presupposes a gold standard. So when I say money, I mean gold here. The money, which I mean gold, is leaving our shores and going over to, let's say, Japan. On a gold standard, when gold leaves one country and goes to another country, what happens to prices in the country the gold has gone to? There is more gold floating around, so prices go up because gold is the medium of exchange. So if there is more medium, then the prices in that medium are higher. And as gold leaves America, the prices go down because there's less gold floating around. So the prices will adjust. That benefit that the Japanese producer had of the American producer goes away as gold balances out. And international trade will eventually balance out so that there's going to be an equal distribution of gold in the entire world, and prices will be solely based on how competitive you are, right? Now, again, that all presupposes an honest money standard, which we are not in. So the economists, the working man has been saying, okay, the working man in America since the 1970s, let's say the 1970s when we went off the gold standard, has been saying, okay.
Here's what almost no one understands about how the dollar actually works. It's not just printed by the Fed and handed out like candy. It's created through credit. Every loan issued, every bond sold, every debt taken on expands the money supply. And for decades, that expansion has been fueled by global trade. America imports, dollars go out. Those dollars get recycled back into our financial system through foreign purchases of U.S. debt and assets. That cycle has been the engine behind our entire monetary illusion. But now, tariffs are jamming the gears of that machine. They're not just adding costs to imports, they're slowing down the entire mechanism of credit creation. When you block trade, you stop dollars from flowing out as fast. And if those dollars don't leave, they don't get recycled back in. The lifeline of the Ponzi scheme, the endless expansion of credit, starts to dry up. This isn't just an economic slowdown. This is a suffocation of the fake money system that everything depends on. And that's where things get dangerous. Because this system only works when it grows. The moment it slows, it breaks. Debt has to be rolled over. Loans have to be replaced with new loans. New credit has to be generated to pay off the old. Tariffs are now acting like a dam in a river, stopping the flow of dollars and exposing just how artificial the whole setup really is. And once people see that dollars aren't being generated fast enough, panic sets in. Banks pull back, credit tightens, liquidity evaporates. That's what we're walking into right now, a deflationary panic. And in that kind of environment, the first reaction is always fear. But for those watching closely, it's also the moment of opportunity. Because once the system starts to gasp for air, once the Fed is forced to react with more stimulus, more printing, more lies, silver becomes the obvious exit. Not just a hedge, not just an asset, a financial escape route from a dying dollar.
One thing I want to stress is that the news is not going to tell people the truth, because and this is both sides of the news. So the pro-tariff Peter Navarro side is going to say this is all going to work out in the end. The jobs are all going to come. They're all going to come roaring back here. We're going to avoid any major crash. We're all a bunch of geniuses. And the anti-Trump globalist side is saying, oh, he's destroying the monetary system. He's going to ruin everything, and the world's going to end. And the problem they're both missing is that the money is fake and has been fake since 1913, and tariffs are not going to change that. So the tariffs on fake money are not going to make the money any more real, right? So if we tariff exports and we get more, or if we tariff the imports and or let me rephrase this: if there is free trade and the fake money comes back to us from imports, or from our exports and they're importing, then that is not going to make the money that is coming back in any more real than it was before. And we're going to be, we're still going to be facing the exponential growth of the M2 dollar curve and an eventual hyperinflation and return to the gold standard. So, but let me break this down so that every normal person can understand what I'm saying here. So the argument for the international free trade that everyone makes in econ, when you take an Econ 101 course and they talk about the international free trade, it presupposes honest money. And a lot of Austrian economists, even Austrian economists, get this wrong, and certainly mainstream economists get this wrong, that we are presupposing the money we are using right now is fine, it's honest. In that model that we use, if you think of two sellers, let's have two sellers they're both selling a car, and one is selling it domestically and the other is also selling it domestically. And they're, for all intents and purposes, they're practically identical cars, but one's a little bit more expensive than the other just due to input costs. But for the user, it's like a Toyota Camry and a Honda Accord or whatever. It's a car to get to A to B, nothing fancy, four-door sedan, not a lot of differences between them. The buyers look at these two cars and they say, oh, Coke and Pepsi, but Coke's a little bit cheaper, so I'm going to go buy the Coke. And nobody bats an eye. No one thinks anything about that. Now let's move one of those sellers offshore And so we'll have one be a Ford and one is a Toyota, right? Suddenly, everyone's like, oh my God, we can't let these foreigners sell in here. We have to buy American. It's your patriotic duty to buy this American car, even though nothing has changed. One car is, a certain amount, let's say it's $1,000 cheaper than the other car. But they're for all intents and purposes identical. Now, the local seller will go to the government and say, oh, they're being unfair over there, whatever, it's slave labor over there. Let's put up tariffs to protect, local businesses and local producers. And the government agrees. And it's, politically, it's somewhat popular. So the tariffs force out the foreign seller. Now, who's hurt by this? The local producer is benefited. The people that are hurt are the foreign seller and the consumer. This is always on the news where one side says only the foreign sellers are hurt. That's the Trump position. Consumers aren't. They're going to be even better off than ever. And the anti-tariff side are saying no. American consumers are bearing the entire brunt of this. Both the foreign.
The early signs of panic are already here. Credit markets are tightening. Liquidity is drying up. The velocity of money, the rate at which dollars move through the economy, is plunging. This is the classic setup for a deflationary collapse, the kind where assets across the board start falling, debt defaults rise, and confidence in the system starts to crack. The tariffs didn't cause this. They just accelerated the timeline. They've put pressure on an already fragile structure. And now, the weight is starting to crush it. What's happening now is what always happens in the early stages of a monetary collapse. Everyone clings to cash. Demand for dollars spikes, not because they believe in the system, but because debts are denominated in dollars. People need dollars to survive the unwind. But this is only temporary. It's the classic deflation before the storm. And when that fear reaches its peak, the Fed will be forced to respond. They'll cut rates. They'll restart QE. They'll flood the system with new money because they have no choice. And that's when silver explodes. See, gold is already responding. It always moves first. Central banks are accumulating it. Investors are hedging with it. But silver's the lagging beast. It waits. It builds pressure. And then when confidence in fiat really starts to break, silver doesn't just catch up. It overshoots. We've seen this before in 1980, in 2011. The same pattern every time. The setup is always the same. Monetary stress, rising gold, then silver going vertical. And the reason is simple. Silver doesn't just respond to inflation. It responds to systemic collapse. It's smaller, more volatile, and when the monetary panic flips from deflation to inflation, silver becomes the outlet for that explosive pressure. People pour in, not just investors, but institutions, funds, and everyday people looking for anything real, anything outside the system. That's when demand overwhelms supply. That's when the move begins. We're not there yet, but we're getting close. And once it starts, there won't be time to react. Silver doesn't rise slowly. It surges. The window to act is before the panic flips, before the next wave of money floods the system. And with the dollar gasping and tariffs blocking the very arteries that used to keep it alive, that flip is coming fast.
And so this has been going on a while. Obviously, that song is from the 60s, and people didn't like it back then, and they like it even less now because they're even worse, right? Everything's, if you look at modern architecture, it's almost designed to torture the eye, it seems like. But people think like, oh, because the housing prices are going up, we are somehow getting more house, but we're actually getting much less house for our value, right? So back in the old days, like I said, you could get a bespoke house with stained glass windows, beautiful molding all over everything. And now, despite the house being, hundreds of times more expensive, maybe thousands of times more expensive, you get a box. You get a set of cubes stacked on top of each other that look identical to the other boxes around them. And in fact, we are actually much, much poorer than we were back in the late 1890s. In the 1900s on a relative basis. Obviously, technology has made things like healthcare and stuff like that, better in some ways. Healthcare might be a bad example, but in some ways, technology has made our lives better. But the inflation has made us much poorer in real terms. And when this dollar Ponzi breaks, that is going to be exposed, because one concept the Austrians talk about a lot is inflation creates what's called the illusion of prosperity, where you think you are wealthier because your numbers on the stock market are going up. But you are in fact not wealthier, and in fact you've been robbed, and we have been robbed, and that's why part of the effect of us being robbed is we're living in cubes. And the ultimate destination was what Klaus Schwab was thinking. It's like, oh well, if we get everyone to just live in pods and eat bugs, right? That's the ultimate economy of scale, right? We have destroyed individualism and the family. Everyone's living in brutalist boxes, and they get their bug protein powder for the week. Now, I do want to give some optimism. When this Ponzi blows, we are going to go back to organic villages. And, I don't know what the existing stuff, I don't know what's going to happen to the existing stuff, because I don't think people are going to want to live in the row houses, but they may not have much choice. But moving forward, over a long period of time, I think we're going to be developing, villages again and cities, because that's just how people live. And the cities are going to be prosperous once again. And, the old buildings will eventually be torn down and replaced with aesthetic beauty. And this does not just apply to architecture, right? If you look at our food, right? When you drive anywhere on the highways and you stop for lunch, you have the same options available to you anywhere you go.
Let's break this illusion once and for all. Tariffs are not a cure. They're not going to rebuild America's economy. They're not going to make the dollar strong. And they're certainly not going to reverse a century of monetary rot. What they will do is this: expose just how fake the whole system really is. Because when you impose tariffs on a foundation of honest money, say gold-backed dollars, you're playing a game with rules. But when you do it with fiat money, backed by nothing but debt and blind faith, you're kicking out the last support holding the illusion together. Think about it. Tariffs are supposed to make domestic goods more competitive by punishing foreign producers. But in reality, all they're doing is encouraging inefficiency. They reward local industries for being less productive. They subsidize laziness. They give power to companies that can't survive without protection. That's not strength. It's weakness, disguised as patriotism. And here's the kicker. None of it works unless the currency itself is real. You can slap 1,000 tariffs on imports, but if your money is fake, nothing changes. All you've done is shift the illusion around. The problem isn't trade. The problem is the dollar itself. And every tariff is a spotlight on that truth. The more barriers we put up, the more obvious it becomes that we can't compete. Not because of foreigners, but because our money has no anchor. That's why silver becomes so critical. It's not just about protecting wealth. It's about exposing value. In a world of fake money and manipulated markets, silver is a mirror. It shows the truth. It doesn't lie. It doesn't inflate. It doesn't bend to political narratives. And when people realize that tariffs aren't saving them, that the dollar is hollow, that every promise from the state is built on borrowed time, silver is where they'll run. Not out of hope, but out of necessity.
If any of the viewers know what I'm talking about, go to basically any town that was built before 1913, right? There's always a town center, and it's always got these gorgeous buildings in the center of it, and it's the joy of the town. And then the second you leave that center from the area or from the era, and you go to the modern, it's like brutalist architecture, and there's no soul to it. So to go back to what I was saying real quick. So people self-organized in organic villages back then. There was no there was some planning. Washington D.C. and parts of New York were planned, but mostly people are like, oh, there's some land. I want to build a nice house and a nice yard for my large family. I'm going to do that. So they do that, right? And over time, these beautiful little towns and villages would build up. And even in the cities, I mean, if you look at pictures of New York or Chicago from the 1890s, I mean, the buildings were absolutely gorgeous. Even the industrial buildings, they took the buildings that were factories back then. I mean, factories where they would have smokestacks and things. They're turning them into luxury apartments now. I remember I was in Durham, North Carolina, and they were taking tobacco barns and turning them into luxury apartments, you know, because the tobacco industry kind of withered away. Anyway, so what happened? I'm mostly using architecture and design in this thought experiment because it's ever present and everyone sort of knows what I'm talking about. So post-Fed in 1913, and especially now, this has been building over a long period of time, enormous amounts of credit. I mean, credit thousands of times over where it should be, has allowed firms to grow, and not only allowed them to, it's forced them to grow, because it's really grow or die. You can't be a mom and pop hardware store in this day and age. You must be a Home Depot. Home Depot can generate the credit that allows them to have economies of scale that the local hardware store could never possibly imagine. Now, the problem is this economy of scale is fake. It's an artifice of the inflationary scheme. It's not real. So it's not an organic growth, but because we see it happening, we just say, oh, well, this is just the modern age. This is just technology that has, you know, formed Home Depot and Walmart and driven out the mom and pop local shops. And, you know, maybe there was some artistic beauty to that, and maybe we lost something. But look at what we've gained, right? We've gained the ability to produce 500 houses on a field in a month, and all we had to give up with was the soul of the village, right? So instead of an organic village being built by prosperous businessmen as they accumulated wealth, now this firm comes in, they clear cut a forest, they bulldoze everything completely flat, and then they put up 500 houses, all looking exactly the same. And I live in something not quite that bad, but I will say whenever I visit any of my neighbors, I never have to ask where the bathroom is. I know exactly where it is, anywhere on my street.
The illusion of fiat currency is a delicate one. It relies on trust, inertia, and global cooperation to keep functioning. But tariffs disrupt that balance. They don't just strain trade, they strain belief. When foreign nations see the U.S. weaponizing trade, cutting off imports, blocking the recycling of dollars, they start asking questions. Why keep holding dollars if you can't spend them freely? Why keep reserves in a currency that's now being manipulated not just by the Fed, but by trade policy? And once that trust starts to erode, the dumping begins. This is where the real nightmare scenario unfolds. Not just inflation, but rejection. If foreign holders of US dollars and debt lose faith, they start selling. And once they sell, the Fed has no choice but to buy. More printing, more stimulus, more lies, all to absorb the flood of returning dollars. That's how a deflationary panic flips into a hyperinflationary surge. The demand for dollars collapses, the supply skyrockets, and the dollar itself becomes radioactive. And silver? Silver thrives in this kind of chaos. Because silver is more than just a commodity. It's an exit from a system that's unraveling. When fiat currencies fail, history shows us exactly what happens. Money returns to metals. But this time, gold won't be alone. Silver, being smaller and more accessible, becomes the people's money. It's the bridge between collapse and survival. And it's still priced like the system is fine. That disconnect is where the opportunity lives. We are not in a functioning market anymore. We're in a narrative-driven illusion. And every new policy, every tariff, every desperate maneuver to prop up the dollar only pushes more people to look for truth. And that truth is found in real, tangible assets. The kind you can't print. The kind governments can't inflate away. The kind that rises when illusions fall. Silver isn't just responding to inflation anymore. It's responding to disbelief. And disbelief is growing.
That's exactly right. I mean, we would have hyperinflated by now if those trillions and trillions and trillions of dollars have left. So if those dollars ever come back, we're gonna blow up overnight. So where was I? The other currencies, yeah, those dollars cannot come back. That's exactly right. We must export our inflation, and the tariffs are the U.S. tariffs that Donald Trump is putting up are slowing down the rate of credit generation because they are preventing us from creating dollars and sending them out at an exponential rate. And so because the credit generation is being slowed down, the Ponzi scheme is breaking. We are going into a deflationary panic right now. This is the very start of it, and it's starting in other countries because they are not getting dollars fast. Remember, every other country on earth is printing their currencies faster than we are, and they need dollars to say, look, our currency is backed by dollars. It's fine. Don't worry. Everything's fine, right? Because they're not getting enough dollars, their currencies are collapsing even faster than ours is right now. And they need those dollars, and they're not getting those dollars because Trump has slapped up some tariffs. So the creation of the tariffs, like I said, slows down credit generation and will cause us to go into a deflationary tailspin. If the other countries, if for example, I think Vietnam is coming right now, they're flying a delegation over to try and do a mutual tariff reduction. If everyone lowers tariffs down to zero and we have a perfectly free trade economy using this Ponzi scheme, these other countries will start buying American exports, and then those dollars, because when you buy things in America, you have to pay for them in dollars. So they must take dollars out of their system and send dollars back to America, and then the export goes out. That will collapse. That will cause the local currency to hyperinflate, and those dollars will come back to America, and prices in dollar terms will explode in America. So this is not going to people like Peter Navarro are saying this is going to somehow we're going to save our domestic stuff. We're going to rebalance everything in the world. That will be true, but we have to destroy the dollar first. And this absolutely will destroy the dollar. So I am temporarily, even though I just said all that stuff in the beginning about how bad tariffs are, I am temporarily 100% in favor of these tariffs because they are destroying the Ponzi system. And what I want to tell to your viewers is that as you watch the stock market, burn to the ground in front of us right now, please remember, these numbers are not real. They're figments of a fake Ponzi scheme. And the only real thing is the underlying money, which is gold and silver, and always has been and always will be.
As the dollar spirals and belief in the system unravels, silver is poised for a once-in-a-generation breakout. This isn't just about price. It's about survival. The financial architecture that has propped up the world for decades is cracking at every pressure point. Tariffs have turned trade into a weapon, exposed the fraud of fiat, and jammed the credit engine that kept the Ponzi scheme alive. Now, with the dollar gasping and global confidence shaking, the only rational move left is into hard, unmanipulatable assets. And silver sits at the heart of that escape. We've seen what happens when these moments of reckoning arrive. In 1980, in 2011, and again now, when the facade begins to collapse, silver doesn't just rise, it ignites. With industrial demand already surging and physical supply stretched thin, the next wave of monetary panic could send silver soaring past all previous highs, driven not just by fear, but by necessity. The system needs something real, and silver has always been the market's final vote of no confidence in paper promises. This is your signal. Silver is not just quietly waiting in the wings, it's preparing to lead the next monetary era. The question now isn't if silver will explode, it's whether you'll be positioned before or after it does. Subscribe now if you want to stay ahead of the curve. And remember, this is not financial advice. Always speak to a professional before making any financial decisions.